the news flow on the rout in the U.S. equities. The White House, which has downplayed the week-long market rout, has now insisted that the recent word from businesses suggests a brighter outlook for the U.S. economy. The White House appeared to be using the term animal spirits to suggest that the sell-off was being driven by irrational fears and negativity. The sell-off intensified and, remember, has now entered its third week. But earlier we caught up with Jeff Dennis, who is the independent emerging markets commentator, as he shares the key factors behind the steep sell-off on Wall Street. Is this a good time for investors make a fresh buy? Let's go across and listen in.
I don't think it's a buying opportunity at this stage, certainly not a short-term buying opportunity. I think there are three things that are really hurting the market right now. First of all, is the really serious growing fears that there is going to be a recession in the US. The data is terrible, frankly, recently, particularly some of the soft data, consumer confidence, business confidence. Secondly, there's massive uncertainty being created by the on-off, how much, who's going to get hit by tariffs, and what's the retaliation going to be like. That just freezes investment and probably investors too. And then thirdly, the other point I think is worth making is that the Fed really doesn't have a lot of room to cut rates here.
All right, then let's keep it going with commentary then, and shifting focus to important commentary then. BlackRock top boss Larry Fink has said that inflation in the US may be elevated by nationalistic policies, including the deportation of workers. In fact, he also added that the markets have in fact been discounting inflation and that there will be further cost increases over the next 6 to 9 months. Fink in fact also alluded to mass deportations leading to problems in the agriculture sector as well. So that's some key commentary coming in.
But important word coming in from the U.S. Central Bank Fed Governor Adriana Kerger, who sounded warning bells signaling that the Fed should keep rates steady for the time being. Now, detailing her rationale, she expressed worries over the persistent nature of inflation in the country, and looking ahead, she does expect prices to shoot up. Touching on the frequently changing developments surrounding the U.S. administration's decision to impose tariffs on goods imported from key trading partners, including negotiations and potential retaliatory moves, the Fed's Kerger said that there was still considerable uncertainty.
All right, then moving on, this is a morning where there's a lot of commentary to look at. The US Energy Secretary Chris Wright also said that the US could reach an agreement with Canada that avoids tariffs on imports of oil, gas and other energy resources. Wright also said that such a scenario certainly is possible, but it's too early to say. In fact, he also added that the US is in active dialogue when it comes to both Canada as well as Mexico.
But worrying trends for the US automaker Tesla amid the deepening sell-off on Wall Street. The Elon Musk-led company has now logged its worst day since September of 2020, plunging as much as 15%. The stock, in fact, wrapped its seventh straight week of losses. That, remember, is the longest losing streak since debuting on the Nasdaq back in 2010. Now, the stock has fallen every week since CEO Elon Musk went to Washington, D.C. to take on a major role in the second Trump White House.